YouTube, what's up everyone? Welcome back to the show. Look, Trump, yes, President Trump just accidentally confirmed the 2026 mega cycle in the entire crypto market. It's freaking reacting like it knows what's coming. Bitcoin's waking up. Institutions are sliding on in, folks, like they're late to the party. Almost like they secretly organized everything behind the scenes. And if you're watching this video right now, guess what? You're early to something massive. Let's get this party started because we're starting right here. You ever notice how sometimes the market does something so perfectly timed, it's almost like it was scripted? Picture this. The US market's open, the ban lifts, and then boom! Bitcoin instantly ripped 6% like someone smacked a bull button mode. That's right. And then my personal favorite, folks, IBIT, they clocked over 1 billion in volume in the first 30 minutes. That's not trading. That's a feeding frenzy. And who's behind the curtain? You guessed it, no other than Vanguard. Yes, we only invest in slow, steady, safe things, Vanguard. Turns out those conservative suits, they've been hiding a little dragon juice in their briefcase. Little hot sauce portfolio, we might say. Apparently, yes. Look, if it's like watching your quiet, strange accountant uncle walk into the casino, loosen up his tie, and slap a fat stack on blackjack. And the best part, this wasn't retail. This wasn't hype. This was institutional money moving with precision. The exact kind of move that only happens when someone already knows what the next chapter of this market looks like. You're going to want to stick around because Vanguard, they're about to contradict themselves in a way that honestly, it's freaking hilarious. And as always, folks, make sure you hit that thumbs up button. It is the ultimate way and the freest way to support the channel. And subscribe if you're not already. And then who remembers this clip when Vanguard said crypto doesn't belong? That's right, in a long-term portfolio. When their CEO went on record saying that Bitcoin, it isn't a store of value. Yeah, let's talk about that. Because nothing, and I mean nothing, screams we totally hate Bitcoin like letting your clients slam $1 billion into Bitcoin ETFs before launch. Listen up.
Spot Bitcoin ETFs. Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we don't, we're not going to change our minds around this unless the asset class changes.
Yep.
Before, why? First of all, we don't believe it belongs. Like a Bitcoin ETF belongs in a long-term portfolio. Someone's saving for their retirement. It's a speculative asset.
That's exactly it.
And the funds that we offer invest in asset classes that actually have underlying cash flow. So like we mentioned stocks, you're buying the forward earnings of a company.
That's right.
And that bond, right,
has coupon and principal payments.
yeah, you're going to pay me back and you're paying me something for lending you the money.
Exactly.
Right. So they both can be valued. And that's for us, we understand why they would rise up in a portfolio and the role they will play, and we can model them. Something like Bitcoin is just too volatile and it's not a store of value. It hasn't been. And it's very volatile. When stocks got hammered in recent crises, that Bitcoin went right with them. And so it is speculative, really tough to think about how it belongs in a long-term portfolio.
I mean, it's crazy. Words come back to bite you in the old butt now, don't they? It's like they told everyone crypto isn't for serious investors while quietly unlocking the back door and whispering, hey, you didn't hear that from us. It's the same script, folks. JP Morgan did the exact same thing. Remember when Jamie Dimon threatened to fire his employees if they talked about or looked up Bitcoin in the office? Why, Jamie Dimon was busy accumulating himself. This is the moment where institutions always do right before a mega cycle. They trash the asset publicly while accumulating privately. And while we're talking about doing things the right way, folks, look, if you're watching the institutions make moves and thinking, okay, but how do I stack Bitcoin safely without worrying about hacks, shady platforms, or monthly fees? That's why today's sponsor is iTrustCapital. Look, they use premium grade custody from Coinbase and Fidelity, the same level of protection that major financial institutions rely on. So you're not trusting some random exchange with your crypto. There's no lockups, no nonsense, and no monthly fee, zero. This is the simplest, safest way to stack your Bitcoin and your crypto, your altcoins as well, inside a tax advantage account. So that when this mega cycle fully hits, your gains are actually yours and not Uncle Sam's. Check out the link down below in my video description. It takes less than 5 minutes to get yourself going, and you're gonna get a free $100 for funding your account. Now let's get back to this story, because here is where it gets to a comedy level. I mean, this belongs in someone's stand-up script, to be honest with you. So Vanguard literally said that crypto isn't a store of value. And then their Bitcoin ETF volume hit 1 billion in 30 minutes. Imagine yelling, "I hate pizza," while inhaling an entire pepperoni pizza in one breath. This is the psychological move of every mega cycle before it happens, right? Your institutions deny, they hesitate, then they criticize, and then they got FOMO, and then they full send it. This is the part of the movie where your soundtrack, it starts to change. The quiet buildup is over. The drums are starting, which moves us over to this, where Bank of America has officially entered the room. Just when you think the institutional wave is done for today, not so fast. The big banks stroll in like the Avengers assembling, you know, hands up like this, just in a line, folks. Bank of America, private bank and wealth management with just over $2 trillion. They announced that their advisors can allocate 1 to 4% to Bitcoin starting in January of 2026. This is the largest wealth machines in America all coming together and saying, yeah, we should probably let our rich clients get positioned before this thing explodes. The fact that the BITB is one of the chosen options, massive. Crypto isn't going mainstream. Crypto has gone mainstream. Wall Street is simply catching up. But we're not done there, because we move over to XRPRightNow.com. Save the link, put it in your favorites. This is your one and only stop. You need to get all your Ripple and XRP news. So the next story was published over there talking about Ripple's biggest move yet over in Nigeria. This is where the story starts to get crazy, folks. This is where crypto stops being charts and starts actually being real world power. So Ripple just got integrated into RedoPay. I don't think I said it right, but I was close. To enable instant digital assets to the Naira settlements in Nigeria. This is one of the most active crypto markets on the planet. And this also solves one of the biggest problems in global finance that we can thank SWIFT for. It's slow and expensive remittances. I mean, we're talking multi-day transfers, crazy fees, all replaced with instant payouts and transparent pricing. But here's the cool part about all this, and you can see it right here. It is not just XRP. They're going to support multiple assets on multiple networks: USD, USDC, Bitcoin, ETH, Solana, BNB, Toncoin, and even Tron. This is a multi-asset highway. The plan, it's simple: to bring Ripple stablecoin RLUSD next and lock down Africa's largest economy. If you didn't know, Nigeria ranks number 6 globally in crypto adoption. So Ripple is planting a flag where adoption, it's already exploding. This right here, this isn't a news headline. This is actual infrastructure building right in front of your very eyes. This is crypto stitching itself into the fabric of global finance, which gets us over to this. Because if the institutional flood that we just covered wasn't enough for you, you have macro traders now who are starting to sound bullish as well. We're talking about HSBC's Max Kettner, one of the guys who actually knows and understands how money moves. He just said the dip is closer to a buy signal than a sell signal. Listen.
Yeah, thanks for having me. Look, I don't think this December will be awfully different. Actually, when we look at the December Fed meeting, most likely they are going to cut. I don't see really much change from the Fed there, and also in terms of language. So that probably is pretty supportive. But overall, I think perhaps markets and investors have extrapolated a little bit too much of that November sell-off, or should we call it mini correction, particularly around crypto. We've had an awful lot of questions around what this crypto sell-off means for equities. And fundamentally, there isn't an awful lot to do really with the broader risk asset spectrum. In fact, what this correction has done in November, it's brought back really a lot of our shorter term positioning signals back towards sort of buy territory. So a lot of short term hedging going on, VIX futures curve, put call ratio, option skews, all of those things really a week ago flashing and still being closer to a buy signal rather than a sell signal. So that really should mean all clear for a year-end rally.
Interesting. So would you be tilting towards risk on here after the rotation we saw in November?
Yeah, absolutely. 100%. So, I mean, we've been saying last week, look, this is exactly the sort of non-fundamental dips that you should actually be hoping for. In reality, you know, when we speak to investors and they say, you know what, yeah, we probably missed the rally a little bit, but we're waiting for the dip and we'll buy the dip. We're buyers of the dips. You know, I think the worst dips are the sort of dips where you say, well, it's perhaps as a reaction to, like we've seen right now, the reporting season, where perhaps, you know, the earnings beat rates are much lower than expected, and then you start to question the fundamentals. Whereas when you look at it this time around, it's sort of, you know, our tech companies, our AI companies that are mostly single A and double A rated, you know, are they issuing already too much debt? That makes fundamentally not a lot of sense. You know, this crypto sell-off, all of this stuff really hasn't made an awful lot of fundamental sense to us. Well, it looks like the U.S. consumer is not only in a healthy state, but actually is still rock and roll. Look at the Chicago Fed's cards data that's been going up despite the government shutdown.
And look, here's the important part from everything he just said. Whenever equities start running in December, Bitcoin and altcoins, they always follow like clockwork. Why? Well, it's simple. Because when liquidity comes back in, crypto is the fastest horse on the track. It always has been. And guess what's happening right now? Let's talk about the Fed, because this one's huge. Yesterday, the Fed injected $13.5 billion into the banking system, the biggest one-day liquidity boost since 2020. On the same day, it officially ended. That was December 1st when QT officially came to an end. That's not random. That is the first step towards easing. Every major liquidity cycle starts like this. Look, 2019, early 2020, and now right here at this very exact moment. This isn't QE yet, but it's the first breath of it. And for markets, especially crypto, this is gasoline. When the Fed adds liquidity, risk assets rise. They always do. And right now, liquidity is no longer tightening. We are shifting towards neutral easing, exactly the environment where Bitcoin historically goes vertical. If the 2026 mega cycle really is forming, this is exactly how it begins. Now, folks, let's tie this all together. Vanguard quietly unlocks Bitcoin exposure and XRP exposure. Bank of America is opening the floodgates for their advisors. Ripple is building international payment rails. HSBC, it is calling for a year-end rally. And the Fed, well, they just flipped liquidity from drain to add. Those aren't random events. Those are puzzle pieces forming a picture we've seen before, just on a much bigger scale. If Trump is right and the next mega cycle truly peaks around 2026, then what we're witnessing right now is the early institutional positioning phase. The part where the smart money moves quietly before the loud money shows up later. Stay ready, folks. Stay educated and stay early. Check out iTrustCapital down below. Make sure you hit that thumbs up on the video, and I'll see all y'all on the next one.